You know, it's fascinating how much the economy affects our daily lives, yet so many people feel disconnected from these big financial decisions. Take the Federal Reserve, for instance. When they announce changes to interest rates, it's like a ripple effect that reaches every corner of our lives. From how much we pay for our mortgages to the interest we earn on our savings accounts. It's like this invisible hand that shapes our financial reality. And yet, many of us don't really understand what it all means. Let's break it down. The Federal Reserve, often referred to as the Fed, is the central bank of the United States. Its primary role is to manage the country's monetary policy, which includes setting interest rates. When the Fed raises interest rates, it's usually a signal that they're trying to control inflation. Inflation, in simple terms, is when prices rise, and our money doesn't stretch as far as it used to. So when you see the price of your favorite coffee going up or your grocery bill increasing, that's inflation at work. The Fed aims to keep inflation in check to ensure that our economy remains stable. Now, you might be wondering, what does this have to do with me? Well, think about it. If the Fed raises interest rates, borrowing money becomes more expensive. This means that if you're looking to buy a home, you'll likely face higher mortgage rates. Your monthly payments could increase significantly, making that dream home feel a bit out of reach. On the flip side, if you're a saver, higher interest rates can be a good thing because you'll earn more on your savings account. It's a delicate balance, and the Fed has to weigh the pros and cons carefully. And let's not forget about the stock market. When the Fed raises rates, it can lead to a drop in stock prices. Investors start to worry about the impact on corporate profits, and suddenly, the market reacts. If you've ever watched your investments fluctuate wildly, you know how unnerving that can be. It's like a roller coaster ride that you didn't sign up for, and it can leave you feeling anxious about your financial future. But here's the thing. While these decisions may seem abstract and distant, they have real consequences for all of us. It's essential to stay informed and understand how these economic shifts can impact your life. Whether you're a first-time home buyer, a seasoned investor, or just trying to make ends meet, knowledge is power. The more you understand about the economy and how it works, the better equipped you'll be to navigate these changes. So, what can you do to prepare for these shifts? First, keep an eye on the news. Follow the Fed's announcements and understand their implications. It's not just about numbers on a page, it's about your financial well-being. Second, consider your financial strategy. If you're looking to buy a home, it might be worth locking in a mortgage rate sooner rather than later. If you're investing, think about how rising interest rates could affect your portfolio and adjust your strategy accordingly. At the end of the day, being proactive and informed can make a significant difference in how you weather the economic storms ahead. And if you want to stay updated on all things finance, from interest rates to investment strategies, make sure to subscribe to my channel.